Good morning, everybody. Good morning, all of our live
Good morning.
here, as well as to our virtual members. I want to welcome you to BOC, Business Over Coffee International here in Memphis. And the purpose of BOC is bringing everyone together. And today, on the last Thursday of each month, is our share meeting. And that's where we put together a collaboration team from like industries to present their businesses and help to educate our members as well as our virtual viewers what each of us do for a living. And just bringing it all together so that we can use those resources if you come across those needs. So I want to just, again, welcome everybody that's here and those of us who are attending. And today, first, our topic is on financial freedom. And to start this morning, we have Richard Reed of Transworld. And because Richard has another appointment here in just a little while, we're going to get started with Richard first this morning and let him go ahead and present on his area of expertise. Okay? So with that being said, I'm going to turn the tables over to Richard, and we're going to adjust the camera for you here, Richard.
All right, very good. All right, very good. Yeah, let's get the mic away. Okay, so I'm going to talk maybe a little bit different than what you might think about when you think about financial topics, but because I'm with Transworld Business Advisors, and basically we're might have a little bit different slant on financing than Steve would or some other people that deal with financing. So to give you all a better understanding of what I'm going to talk about today, I want to tell a little bit about my company. And I'm not going to do a big sales pitch, but just a little bit about the company I am. I'm with Transworld Business Advisors, and I'm going to start off with some of the characteristics of our company, and I'm going to start off with what we are not, okay? We're not attorneys, we're not accountants, we're not bankers or security brokers, nor are we financial advisors. Okay, so we recommend anyone who needs that type of advice to seek out the appropriate counsel prior to making any business or financial decisions. Transworld Business Advisors, what we are, is we're a full-service business brokerage that, for the most part, is engaged in business and franchise sales, in commercial realty, and franchise development, and we act as intermediaries for mergers and acquisitions and for financial transactions. We have a little background music here. Our activities in these areas include working directly and indirectly with a variety of financial resources, both conventional and non-conventional, and we work as intermediaries between business buyers and owners of those money lenders. So today I'm going to speak a little bit about some of those resources, giving some of the pros and cons and perhaps an example or two of where the different financial instruments might make sense from a business perspective, either a existing business owner or a potential business buyer or a startup. Okay, so and I want to kind of get a little bit of interaction going here. So I'm going to start off. We'll start off with conventional money sources. Okay, so we'll start off with that. And so I just wanted to ask, when I say the word conventional lenders or conventional money financing, what do you think of?
Traditional.
Right. What would be some examples of some conventional?
Banks.
A bank loan.
Okay, banks, right. Banks are a good one.
Credit unions.
Banks. Credit unions.
Personal savings.
Okay. Savings. Anything else?
Relatives.
Well, we're going to keep that in here. Okay, cash. I would even go so far to say like an SBA loan would be conventional. Okay. So we'll put down SBA loans. Okay, so those are some of the things that we think about in conventional financing. Okay, so in conventional financing, one of the things that we want to consider is, okay, what are some of the things we would do with that, with any finance we would get? If we're talking about financial instruments of any kind, what are some of the things that we do with those financial instruments? First of all, does anybody have an idea of what a financial instrument might be?
Check.
Check is a good example. A check, a stock, a bank loan, anything that has to deal with...
Money order.
Yeah, money order, anything that has to deal with money transfer, or not even money transfer, but just the transfer of agreement to compensate somebody for something else, whether it be a service or goods. Okay, so some of the things we might do with money instruments is raise capital, right? So if we're like starting a new business up or want to expand a business, we may need a money instrument of some type to raise capital.
Make large purchases.
Right, make large purchases. A couple of things, or pay a debt, you know, a couple of things that some people don't think about when they're thinking about money, financial instruments, and things we might do with them is buy or profit. And so we don't think about it in that perspective, but let's say, for example, that I have a money instrument in form of stock, okay, or better yet, let's use like a T-bill or something like that. We might use a financial instrument to generate money or buy or profit by buying like a T-bill or something like that when the interest rates are high, you know, buy the T-bill for low or whatever. So we can use it to generate money without actually anything changing hands. We can use it for collateral, and we can also use a money instrument, a financial instrument, just to basically show ownership. So a little bit later, I'm going to talk a little bit about a non-conventional financial instrument that is used strictly for showing ownership. Okay. Okay. So in the conventional money lending, what are some of the characteristics you might think about conventional financing?
In characteristics in what way? Meaning, like if you take a
know,
loan
getting
from a
money.
bank?
Yeah, if you're getting money from a bank or something.
Well, you've got interest charges you got to pay.
Right. Okay, you're going to have to pay interest charges. Okay. What about how the process of getting the money?
You have to go ask for a loan.
Right. You have to ask for a loan. So
Apply.
right. You have to apply. So some of the characteristics are you have the loan request, obviously. Most banks or credit unions, the SBA, going to require you to have things like an article of organization or an article of incorporation or a partnership agreement or something like that. Something that shows them that you, and I'm talking from a business perspective, something that shows them that you actually have a business. It may be a business plan. You may go to a bank with a business plan. They may require like a company biography. It may require biographies of the owners or principals. And it wouldn't necessarily have to be an owner, but it might be like a key person. If you're starting up a company, you may be the owner, you may have 2 or 3 owners, but you may have a key person in there that, for example, might have a business license that is required to run your business, but it might be in that person's name. He may have the qualifications to get the license. So he would be a key person. Okay, so that's some of the things. Typically, most banks are going to require like 3 years of taxes, and they may require it for the business, especially if it's not a C corporation. They may require it also for the individuals for the last 3 years. They may require like a statement of your professional experience, you know, your education level, things like that. So there's oftentimes a lot of paperwork involved there. And especially if you get to like an SBA loan, there can be a considerable amount of paperwork. It can take a considerable amount of time to actually go through the process. Okay, so now I want to talk a little bit about, because I think we're all pretty much familiar with the conventional, you know, we've all probably dealt with a bank, bought a car, bought a house, things like that. So we're kind of a little bit more familiar with that. But now I want to talk a little bit about non-conventional. I don't know if they'll be able to see that. Probably not. I probably need to use black. And again, I'm talking about this from a business perspective. Okay, so going back to the same we did there. Anybody have any ideas of some of the non-conventional sources, money lenders?
Rob a bank?
No.
I
I'm talking about legal sources.
Oh,
Would-
no.
Would that be like, private or silent investors?
Right, okay. Private investors. It could be like in fact, that's one of mine. We'll call it direct private. And I think somebody mentioned that up here when we talked about savings is like relatives. That might be a private investor, might be a relative or a good friend or something like that. Somebody has faith in you where they're not going to, necessarily require all the documentation or things. More like a personal loan. What else?
What about things like life insurance policies
Okay.
on an owner or key person or whatever?
Like whole life policy, cash value.
The cash value, that there is cash there, and or that protects the loaning institute, whoever or whatever that may be, in case
Okay.
a principal dies or what have you.
Right.
Would this be like also a second mortgage in the home? Or equity from your home?
No, really, I think that would be more of a conventional. Yeah, I would think that would be part of your bank thing. Yeah. Any other ideas? Okay. Well, one of the reasons why I want to do this is to show that, when we talk about conventional, it's pretty easy to throw out some things, and these can be expanded a little bit in conventional. But when you talk about non-conventional, a lot of business owners don't understand that there's a number of ways. I'm going to talk about 13 different things that we can put in the non-conventional category today.
Don't they have angel investors? Is that something different? Angel investors? Okay, I challenge you.
Yeah, no. I'm just trying to think what category I would put them in, because they're really, I think that they would really be more like a direct private. More like, I think they'd be more like this, although they're not really. They don't really fall in. And I'm not familiar with the particular one you're talking about, but there's a number of them across the world that they're extremely high risk investments. They're basically where, and correct me if I'm wrong on this, is basically where I would say, like, okay, I've got a friend in Sri Lanka, for example, and so I may say, I want to help build that country up, so I'm going to loan $1,000 to a small business in Sri Lanka. Okay, that's an extremely high risk loan, but that would be more of a private decision, I think. Okay, so but yeah, that's definitely a non-conventional money source. Good one. But I think that would really fall in direct private. Again, now one of the things I will say about some of these is there's a lot of gray lines between some of these. Okay. And so the next guy coming down, and the next guy talking about, he may say, well, these two that Richard talked about are really the same, or there's another one should be in between here, or things like that. So, I am not an expert on this. I'm just going to talk a little bit about some of the things that we use to help finance business transactions. Okay, so I'm going to start off with one that we don't have on here. And I'm not going to do these in any particular order. In fact, I deliberately have them kind of mixed up so that we're jumping kind of to one extreme to another. So PEGs is the first one I'm going to talk about, private equity groups. Okay, and a private equity group, I'm not going to get real technical about this, but a private equity group would be a company or a group of people that say, we're going to pool our money together and we're going to invest. Okay. And so, historically, private equity groups, I think, oftentimes have been looking at buying entire companies. And a good example we can use today, who might, there's somebody in the news every day today that was involved in a private equity group. Anybody think who that is? Bain Capital.
Oh, okay,
Yeah.
okay.
Yeah. President, the guy running for president, Romney. So, and I can't remember for sure if they would call themselves a private equity group, but basically that's what they are. It's a group of investors that get together, and they may buy a company that's struggling. They may buy a company that is on the market for an extremely good price that shows a potential. Understand that private equity groups are in the business. In fact, all these are in the business to make money. So they're looking for good deals. Okay, so now I do have a handout today. I'm not going to hand it out to shuffle paperwork and everything, but you're welcome to pick one up. I've actually got two of them. I've got one is a letter that I wrote earlier this year about private equity groups and a shifting of what we've seen, what I have seen in private equity group, where now we even have private equity groups that are willing to invest in businesses on a minority basis, okay, which means that they'll own less than half the company, which is historically has been kind of unusual. Most of the time, private equity groups have wanted to have controlling interest in the company. We're seeing a shift in that. As the company's in the right situation, that we've got some private equity groups that are willing to invest in minority investments. I think part of it's because money is so cheap right now, and everybody's looking for a way that they can make a little bit more money, even if it's a little bit more risk or more non-conventional. The next thing I want to mention is, and this might be arguably not really a financial, but I think it is, personally, is an M&A, a merger and acquisition. Again, historically, mergers and acquisitions have typically been viewed upon as a takeover of one company taking over with another company or joining two companies together. So what I'm seeing is an interest in now where in some businesses where they're seeing more where it can be beneficial to basically merge with another company to draw money in to their company, okay, to basically get financing. So they're basically giving up some control or some part of their company to another company for financial reasons, okay? And historically we've seen that somewhat, but it's kind of shifted a little bit more. I think there's a lot more flexibility in what companies are willing to do.
Would this be like a partnering almost, where you got like a computer company and a software company?
Right. Yeah. They might the software company, for example, may not have the capital, the cash flow to continue to develop software programs. So they may say, okay, let's instead of selling out, they may say, let's merge with this other company that's selling hardware so that we can kind of work together. That might be a good example. There's a lot of examples. It's almost in a merger. It's generally, in my opinion, it's generally considered to be a mutual positive thing. In an acquisition, it can be hostile sometimes. Yeah. Okay. So the next thing I want to talk about, and I'm just talking about these all briefly. This is kind of an unusual one. A lot of people may not have ever heard this, but it's a security. It's a security-based credit line. Any ideas what that might be?
Put in your house collateral. Yeah, thank you.
Any other ideas? That's not it. Okay, what's the security? We talk about in the business world, we talk about securities. What are we talking about?
Well, the equity in your home.
No. Securities, we're typically talking about stocks, bonds, things like that. Yeah, securities market. Okay, and again, as a reminder, Transworld, we're not securities people. So we don't do security transactions. We don't do stock sales. We don't do any of that stuff. But we do work with companies that do what we call security-based credit line. Okay, so let me give you an example. Let's say, for example, that I have a company, and my company owns 10,000 shares of stock A. Okay, and we bought this stock A at $10 a share 5 years ago, and it's now worth $30 a share. Okay, so we've had a huge increase in this stock. Well, let's say that my company wants to expand. We want to generate money. Okay, but we do not want to sell this stock. Okay, two reasons. One, might be we don't want to pay the capital gains from the 10 to the 30. Second might be is that we think that stock's going to go to 50. We don't want to lose out on that additional potential. So what we can do is we can do what we call security-based credit line, where we can take that stock and we can take a loan out against that stock. Now, this will not work for stock held in a retirement account or a 401k or anything like that, but it will work for standard stock deals. There's some limitation to that. You know, they're not going to do any, you can't get a security-based credit line on stock that's extremely high risk, penny stocks, things like that. But if it's a solid base stock, you can actually get a loan on it, not sell the stock, not have to pay capital gains, keep the stock, get a loan on it. At fairly low interest rates, depending on the size of the loan, things like that, it might be as low as 1.25%. You know, 1.25% to maybe as high as 5%. Depends on the risks, of the, you know, what the stock history has done. If the stock's like this, you know, it's going to be tougher to get a low interest rate. All right. Now, I said that this security base did not, you couldn't do that with 401k or retirement account. But there are other non-conventional ways to use a 401k. I'm using just 401k because everybody knows what that means. There are other retirement accounts, but a retirement account, a 401k, there's ways that you can, like starting a business or expanding a business. If you've worked for a company for 10 years or something, and you have a 401k with this company, and you get laid off, or you leave the company, and you say, hey, I want to start my own business. Or you may have a business where you say, I want to expand my business, and I have this money in this 401k. Well, historically, we thought, we can't touch that until we retire. Well, there are ways where you can, and you have to do it properly, so you have to use the right companies to do it. But there are ways where you can basically take your 401k, extract the money out of it to start your business or expand your business, and buy stock in your own company. So instead of me having stock in General Electric, long-time company, been around forever, instead of me having a 401k with stock in General Electric, I can have a 401k with stock in my company.
Now, does the company, in order to do something like that, does the company have to be set up like as a corporation?
It has to be a C corporation.
Okay, has to be a C
It has to be a
corporation.
C corporation. So, and there's it's not something you want to do on yourself. There's companies, we represent two companies that actually do that.
Mm-hmm.
They have two different ways they do it, okay, and I'm going to talk a little bit about those two different ways just to show that there's a difference. But I would not recommend you doing this by yourself, and you don't want to do it for small. If you have like $5,000, you don't want to do it. It costs you too much to do it. But if you're like over $100,000 or $100,000 or up, then it may be a financial instrument you may be interested in doing to expand your business or start one. And the reason I say you don't want to do it if it's too small, you're going to pay such a high amount to do it, because it's a lot of legal work, a lot of stuff that's got to be done right, because you don't want to get crosswise with the IRS. Okay, so but that's one way, and there's like one of the ways, the companies that we represent, one of the ways you do it, they both basically you buy stock in your company. But it's the way you buy the stock, the way you set it up, the program you set up. And one of them is geared up more for if you're just going to be a single person, one employee, or whatever. But the advantage of it is you can contribute a great deal more back into your 401k. For example, the first one I mentioned is you can put up to $49,500 a year into your 401k, as opposed to $16,500 or something like that, if you work for somebody. So it's a great way if you have a 401k, you want to start your own business, and now I understand there's risk, it's because you're starting your own business, and you want to make sure you're starting a good business, but it allows you to build up your retirement faster by investing more money if your business is successful. Okay. The second way is geared up more for if you have multiple employees. Okay, if you're going to have a company that has a number of employees, you would use the other way, because you won't be able to contribute that $49,500. But the first way, if you contribute as an employee, if you contribute into your employee account, 401k, you have to contribute to all the employees. So if you're the business owner, you don't want to contribute the same amount to all your employees that you would contribute to yourself. So you use the other way. Okay. And I know that's a little confusing. I don't expect you to to remember all that, just to have a kind of idea in the back of your head. So if it ever comes up, you know, hey, this is available. Okay, the next thing is VCs, venture capitalists. Now, those are kind of in my opinion, this is all my opinion stuff, but a venture capitalist is sort of like halfway between a PEG, or a private equity group, and a direct private. It's kind of halfway between there. A venture capitalist is an individual that's invested money. And it might be in buying a business, it might be whatever, but there are actually venture capitalists out there that are willing to loan money to companies. Okay? It's going to, obviously they're going to have a lot of criteria. They typically don't loan as high percentages. For example, with an SBA, you can get up to, you know, like 90% loan on it. A venture capitalist typically won't loan that high a percentage, but you can typically get your money quicker. There's less paperwork, you know, and they're obviously taking a little bit of a risk, but they're getting a greater return. You know, if a VC turns around and loans somebody money at, say, 6 or 8% of business, that money, if they had it in a CD or something, is going to draw 0.25%. So they look at it from that perspective, okay? And obviously there's some different nuances to this, and different VCs have different ways of doing business. Okay, and the next one I want to talk about is business grants. Okay? Now, how many people in here, by show of hands, think that a grant is free? Business grant is free?
At one point in time, I did.
Yeah. Okay, why is it not free? I had some things free. Why do you think a grant is not free?
Everything that it takes to put into it?
Yeah, right. A business grant can take a lot of work, and to really have a good shot at getting a business grant, you almost need to hire professionals to develop for you. So you're paying money up front in hopes that you'll get money in return. So business grant can be somewhat risky. If anybody can write a business plan, you know, for example, but it does take a lot of time, and you can do the research on the internet. You can find out, you know, how to do it, and if you have a computer and you can type and you can edit, you know, all this kind of stuff, you can write your own business plan. The advantage of using a professional to do it is that they know the keywords to use, they know the format that the different grant providers like to see things in. And so although the grant money actually is free from the grant provider, it can cost you a lot of time and or money up front to move that direction. Okay, how are we doing on time?
15, 17 minutes.
Okay, very good. All right, so I'm good. All right, next thing, and ask me any questions if you have any, or we'll wait till last. It doesn't matter either way, but okay, this is kind of an interesting one. This can have a lot of nuances, and I'm not going to go over all of them, but just going to talk a little bit about it. A buyout leaseback. Okay, a buyout leaseback, and again, it can have a lot of different nuances, so I'm going to just kind of give a general. Let's say, for example, that I have a business, and through this downturn the last few years, it has taken a hit. Okay, and so I've had cash flow problems, and I've had to you know, maybe cut back on some things, and I haven't had the profit I wanted. But now the economy's starting to show signs of improvement. I want to basically expand this business, okay, or whatever. So, but I don't have the cash to do it, okay. So what you can, one of the things you can do is you can basically do a buyout leaseback. Now, in other words, what you're doing is you're basically selling your company and you're leasing it back from the people that buy it, okay. Now, obviously, the people that are doing this are expecting to get a return on their money. So you're giving up some control of your company, some or all of it, depending on the instrument that's set up, of your company, and you no longer actually own the company, but now you have capital to invest in. So you might be an officer or something. You're going to keep some kind of involvement in the company. It's not for everybody, but it does work well in some situations. again, it has a lot of different nuances, and you don't want to just jump into one. But I have seen this happen before, where people will sell their business and lease it back, and then it's a contract set up right. They can get to the point where eventually they can buy it back.
Why would you do that?
To generate money, generate funds. Yeah, these are all different ways that you can come up with funds, and there's not, some of them will work well for most applications. Some of them will work better for some, and some will only work for a few applications. So that's one of the things when you're actually going in to get money, you have to consider what's going to be best for me, And on the other side, the investors, whether it be the bank or a venture capitalist or a private person, they're looking at it from their perspective. Okay, so it can get really cloudy, and there's a lot of gray spots in between there. But I'm just trying to give you some ideas of some of the things that are available. Whether or not you'd ever consider using them or not would be up to you, obviously, because some of them are more risk, and some of them are quick cash flow.
Question.
Yeah.
Will you have time to talk about protecting a nonprofit from being taken over or bought out or anything?
Protecting a nonprofit from being bought out.
Like if you're forming a giant munition building,
Right.
how do you protect that from buyers trying to take it over and corrupt it?
Okay. Well, no, I guess.
Let me call you.
Yeah. Because the question you've got is, how do you protect and you said nonprofit, but it can be the same thing for a profit. How do you protect that from a hostile takeover, basically?
Nonprofit?
Yeah, for nonprofit, I'm trying to think, how you would even have attempt at a hostile takeover. But
Okay, you have a huge church, mission, homeless shelter, whatever
Right.
thing, and you want to stay God-centered, Christian, and then you die.
oh,
How do
okay.
you keep that
Right,
entity
yeah, okay,
protected?
Well, basically, again, I'm not going to get into this a lot, but what I would say, what you want to do is you want to talk to like a good trust attorney.
Okay,
You'd set it up in a trust,
okay,
and within that trust, you can define certain boundaries that anybody operating this business would have to maintain those boundaries. And then
Okay.
the trust, your trust, whoever's managing your trust, which is not necessarily the person that's managing the
right,
business.
right,
One of their jobs would be to make sure that the business is being managed based upon the way the trust is set up.
okay,
Because that trust would then be the owner
Right.
of that
okay.
mission or
Yeah.
whatever.
Yeah, that's
That's all right.
again, an attorney would be a good
That's all
good
right.
one to talk to, a good trust attorney. Okay. Okay, now the next one's kind of, well, I'm just going to write it down. Talk about one here. I can't write when my knees are bent. Okay.
Thank you for mentioning that. That's great.
Okay, turnaround companies. A turnaround company, there's two different ways that they run turnaround companies. And the one way they're completely different than anything else, and the other way they're kind of similar to a couple of other things. But a turnaround company can be a fee-based company where, going back again to the example where the business that struggled for the last few years because of the economy and stuff, the owner or the owners think that there's a potential to get their company back on track, but they can't figure out how to do it. So they may pay a fee to hire a company to come in and do what's called turnaround. Okay? They would basically come in, look at all your books, look at your operations, do this, whatever. They may say, okay, look, you need to buy this piece of equipment, to increase your production on this line, or you need to. Unfortunately, nobody likes to hear this, but it happens. You may need you're too many people heavy. Okay.
Mm-hmm.
So, and that's where everybody gets a bad name. We're seeing it in the news up now. People get laid off. Well, you might lay off 200 people to save the jobs of 800 people. That kind of thing. It's not always a pretty picture. They're not always viewed nicely because they're coming in and they're doing things that they're making changes. And a lot of people don't like change, whether it be good or bad. They just don't want to see anything change.
They're the ones having to come in and make the tough decisions. So
Exactly, right. So some of those do that fee-based, but there are also some turnaround companies that do it basically on a percentage of improvement. Okay, so they don't get fees up front. They get fees in the back end. After they make the improvements, they get like a chunk or cut of that profit. Okay, so there's that, and in that way, they would be like a financing company. Okay. Because although they're not necessarily putting cash into your, although they might, certain turnaround companies might put cash in, and then they really, jump up to one of the other areas more. But they basically help you improve your financial structure without necessarily you having to come up with a lot of money. Okay? And that's kind of a stretch, but I want to put that in there. Okay, the next one, I think I'm going to erase that top there. I'm going to jump back up here on top.
Don't want to have to bend those knees again.
Yeah. So we're still talking about non-conventional. The next one that I want to talk a little bit about is the EB5 program. Does anybody know what that is?
Nope.
Not a clue.
Okay.
Earning face.
Ooh, that's,
EB5 program is a government program to basically try to inspire foreign investment in the United States. Okay? So if you're on the EB5 program, you might be from another country, for example, and say, hey, I want to get an EB5 visa to come in and work toward my U.S. citizenship. Okay? So under the EB5 program, you have to invest in an American company. And typically, that investment has to be $1 million or more.
Okay, so a foreign person from the Middle East wants to operate his business here in the United States.
No, not necessarily. Let's say somebody from the Middle East. Let's just pick a country. Let's say somebody from Saudi Arabia. Saudi Arabia guy wants to move to the United States. He's got family here or whatever, but he wants to come to the United States. There's different ways you can immigrate, but he's got a lot of money. He's got $5 million, and he wants to come to the United States, and he's willing to take and invest in an American company. Okay, he's willing to invest that $1 million or more. There is an exception to that. You can be $500,000 if it's a like a business in like a distressed area. They got a special name for them. It's escaping me right now, but typically it's $1 million. So he says, okay, I'm willing to invest $1 million in Steve's company. Okay, I'm going to be basically a part owner now of Steve's company. Okay, but I need to come over to the United States and help Steve run his company. So I need an EB5 visa. Okay, and then he'll work towards citizenship off that EB5. Okay, now it's a not very well known program. There's only about, I think it's 10,000 potential EB5 visas available in a given year. In 2011, there was 3,000 applications. So it's not very well known. Now in 2011, 3,500 EB5 visas were issued from previous applications in the ones in 2000, which was an 80% increase over 2010. So we're seeing a lot more money coming in, or a lot more from the EB5 program. We're seeing a lot more interest in it, in investing in the United States companies. Now, and I'm not only getting politics on that, but, some people may not think that's a good idea, but, we do that all the time. And we invest, American companies invest in foreign businesses. American individuals invest in foreign businesses. In fact, Beverly, earlier you said something about this angel program, and I mentioned something about Sri Lanka. That would be a similar type of program. And different countries have different requirements here. I know at one time in Ecuador, you could go down to Ecuador and get a visa similar to this. They didn't call it that, but for $25,000. You had to go down there and put $25,000 in something down there, in their bank account or a business or something like that. You could get a visa down there.
so you're really buying the visa from the country?
Well, I mean, you're investing in the country and bringing money into the country, and they say if you do that, we're gonna give you a special type of visa towards citizenship.
Hmm.
Okay? And so, now that's really like a citizenship program, but you have to remember, they're investing a significant amount of money into a company in the United States. So if you had a company that needed a money injection,
Right, okay.
this would be something that you might could look at. That if you found somebody that had, you could say, hey, we need an outside investor in our company, and we're willing to give up 20% share of the company for $1 million or something.
Now, it's typically that this Saudi Arabian person who has $1 million to invest is typically that $1 million sunk into one company here, or is that?
I don't know enough about the EB-5 program to be an expert on it. I just know some of the basics of it. My guess is that no, it'd have to be one company.
Okay, just curiosity.
In other words, he couldn't say, I'm going to buy $1 million worth of stock in 100 companies.
Right.
I don't think that's the way it works. I could do more checking on it, but my understanding is it's not that way. It's more like an investment in one company. I'm not going to say you can't do more than one, but that's I think what I'm trying to do is get you to invest in a single company. Okay. Okay, very good. I'm about done here. I'm going to skip that one because it's kind of a conglomeration. Okay, I'm going to talk about two of them kind of together. MCAs and ARs. Label it ARs. Okay, MCAs and ARs, they're kind of similar, but they have a little bit different slant. An MCA is a merchant cash advance. Okay, let's say, for example, I've got a company that does a lot of credit card sales, okay, or whatever. There's companies that do merchant advances on those credit card billings because it takes a while for you to get your money and things like that. So it kind of becomes like a revolving account where you can get, and they charge an interest. I mean, they're in this to make money, but it gets to be like a revolving account where you can say, okay, I've got $40,000 in credit cards that I submitted to Visa yesterday, and I want to take an advance on that $40,000 because it's going to be 15 days before I get my money from Visa or whatever. So that would be the MCA, the merchant cash advance. And there's companies that typically do from about $5,000 to $250,000 in those type of advances. And there may be other companies that do more. That's the ones that we deal with. Then the accounts receivable financing is if you have invoicing and things and you have accounts receivable, you can do the same thing. You can say, okay, I want to have a cash advance on, I've got $1 million worth of accounts receivables for my trucking company, and we want to go ahead and do this, and we want to do it now, and we don't want to wait 30 days to get those receivables in. So you can do that, and those typically, accounts receivable typically range from $50,000 to about $1.5 million in monies available from different companies. Okay, and I think I have, okay, so, and then there's the last, we talked a little bit about direct private, which would be somebody just loaning money to somebody else that they knew, or their friend, or their relative, or things like that. So we all have I think we have an idea of the concept of that. Now, I would say this much about direct private is do it right. Have a written contract, have all the terms laid out so that there's no, because it can generate a rift between friends or between family. If one guy thinks I'm getting it 5% and the other guy says no, it was 6%, you need to do it right. You need to do it right. Okay. And then the last thing is kind of a conglomeration. There is a small business finance market out there that does a lot of different things. Basically, there's no structure to it, like typical things that we see. It's very unstructured. It's pretty much what two people will sit down and negotiate. And so I'm not going to go into that much, but that's kind of the non-conventional deals. And again, I just kind of tried touching on them, but I just wanted to kind of give you guys an idea that there's a lot of ways to generate money that besides going to a bank. But banks are loaning more money today, so they're not necessarily a bad place to go. It's just that there's a lot of other things. Okay, any questions? Yeah.
What are your ideas in regards as far as to the SBA?
The SBA, there's three basic SBA programs, and it depends on, I guess, what direction you're trying to head. You have the 7A loan program, the micro loan program, and then the 504. Okay, and it depends on what micro loan basically is. Small loan for a short period of time, smaller dollar amounts, and I think they're limited to like 50,000, and the average micro loan I think is around 13,000 or something like that. And they might be like, you might need like $10,000 for 6 months. They're a little bit faster to get through than the other two programs, but it's an SBA, so it's government, so basically it's going to require some paperwork. What things you might use for a microloan are working capital, purchase of inventory, purchase of furniture, and purchase of machinery or equipment. Now, with a microloan, you cannot buy real estate. Okay. However, if you want to use a 504 program, and I think the 7A program, both of those allow you to do real estate. In fact, if you're going to, I believe it's the 504, I think, and I'd have to look on this because I really didn't do a lot about the SBA research, but I think on the 504 you have to have real estate. You have to be buying. In other words, if you're buying a business on the 504, I think you have to own the property. In other words, you can't buy a business that's leasing space. And I think that's the 504. It might be 7A, but so I kind of got into 3 different things, and I kind of lost sight of your question.
No, you answered. It was sufficient. Thank you.
Okay, very good. And we do have, on an SBA loan, if you're borrowing any significant amount of money, then, we have contacts with companies that can help you go through that process. If you're only wanting to borrow, like a micro loan for $10,000 or something, obviously you don't want to pay some company $3,000 to get $10,000 loan. So, or whatever that number is, But, so that may be something you want to try on your own. And they're a little bit easier to do. But if you're going to go with a 504 or a 7A, then you may want to go ahead and invest in the company to help you with it.
Very
Any other
good.
questions?
No? Great.
All right.
Well, thank you, Richard.
All right.
And I know you have to run off, so I appreciate your time this morning and everything. And if you want to just leave your handouts, we'll.
Right. Basically, if I can just take
passed out
another
to
second, the 3 handouts, I just left 3 headings here. One of them is just a letter that I wrote earlier to some people about private equity groups and how they've shifted the requirements.
That's now.
Oh, yeah, or just let people pick them up. And then I also have with it a caution for the private equity groups. So you might, if you're interested in private equity group lending, you want to read this caution. It's written by John Warlow. And then the third one, just kind of like on financial instruments, just kind of a little primer. And I guess with that, I'll get out of your way.
Very good. Thank you, Richard. I appreciate it.
Richard,
All right. I think with that being said, Richard, I appreciate it. And for those of us who own our own businesses and so forth, I think you see a lot of opportunities here where there's monies that can be available for you that, some of these things get pretty in depth. And that's why we would use a person, an expert like Richard, to help us find these sources and match us up with the proper source so that we don't, there's a cost to money,
Right.
period, and the least expensive money you can get your hands on, is the route you want to go, because let's face fact, we work really hard for the profit that we make in our businesses. So we want to keep as much of that in our pocket as we can. And somebody like Richard and Transworld is a way that a resource for us that we can use to help us get that, depending on how much money you need and so forth. So with that being said, I want to take just a brief moment or two, and because I knew that we needed to get Richard started and get him out of here for his next appointment. But I wanted to take a moment or two to thank Sherry Henley. She was unable to be here today because she's got some personal things that are going on and taking care of family, and so Sherry had asked me to kind of take over today for the MC part, which I'm not very good at. But once again, I want to thank Sherry for that, and ask you guys to keep her and her family in your thoughts and prayers, okay? Because I know she's going through a lot right now. With that being said, my name is Steve Drope, and I'm with New York Life. And once again, our topic today is on financial freedom. So I was going to spend a little bit of time and talk about financial freedom from the personal side of things. And I'm going to look for that napkin that Richard had to clean the board up a little bit.
You put it away.
May very well have.
I'll go. You stay there.
Okay. And basically, what I wanted to ask is, from a personal sense, as well as a business sense, what does financial freedom mean to you? What do the words financial freedom mean? Any ideas? Any?
No debts. No
Okay.
payments due.
Having the financial capacity to take care of what you need to take care of in your personal life and your business life.
Okay. Knowing that your bills are paid, you've got a place to live. You don't have to worry about anybody coming to take it away from you, which, as we know, that's happened a lot in the last few years. So I'm going to try to write this down and make it interactive as soon as I can clean this board up a little bit. And what I do is, with New York Life, not finding one here. I'll use mine.
No.
We got some back here?
Yeah.
Ah, wonderful. Guess I should have looked. Whew. About to knock it off. I'm not a very good writer, so y'all have to forgive me.
Shall I be your Vanna?
So financial freedom. All right. So to kind of go back over, no debt, bills are paid. What else?
What she said. You really did.
What'd you say,
Having the
Tia?
ability to.
Having the financial capacity to take care of what you need to take care of in your personal and your business life.
Okay, just
Same thing.
things taken care of. Okay. All right. And does anybody have any ideas how we get there? Outside of the normal of just working hard and making money.
Teach yourself to save and pay yourself first.
Okay. So how do we get there? How to save and pay yourself first?
Yes. That would be part of saving, obviously.
Okay. All right. That's very true. So I'll ask the question, how do you feel about saving for your retirement?
You should put something up every month.
Okay. Do we all do that?
No.
Okay. Why?
We think we can't afford to.
Right. And the longer we go without doing that, the harder it is to get there. Okay?
Well, because we have pressing things right now, and retirement is a fog way in the future somewhere, we think.
Absolutely. And for me, as a husband and a father of two young daughters, it's my responsibility primarily to provide for them. Okay?
Right.
So what I'm going to do And this is as basic as they come, okay? Does anybody know what that is?
A rectangle
Okay. I'm going to do something on top of it here.
with some wheels on it. It's a vehicle. But,
Now, do you know what that is?
The foundation.
Okay.
oh.
That's the foundation of our house. Okay? If I take this house and I go build it on the dirt lot next door, okay, I can build that house with the greatest of materials and all that kind of good stuff there. It can look all pretty and everything. But if it's built on that dirt lot, how long do you think that house is going to last?
Well, it could be sitting on a sinkhole for one thing.
Right. So the whole thing's just, over time, it's going to crumble pretty quick.
Right.
Right?
Mhm.
Okay. So, but if I go out and prepare the land and, put a good, nice concrete foundation with the rebar and all that kind of good stuff in it and get it strong, and then build a house on top of it, do you think it'll last longer?
Yeah.
Okay. This is one area that I deal with at New York Life, is building that foundation. Okay? You got to protect things. And I'm going to ask a question. How many of y'all have actually ever sat down and talked to a financial consultant? Okay? All right? You're among the minority.
Mm-hmm.
Okay? Most people don't, and most people don't because it makes them nervous or scared. There's an embarrassment factor in there. Okay? Because, like you said, there's more immediate things, paying the house note, the utility bill, that
Buying
kind of thing, that we're barely making ends meet and whatnot, okay? And so that's where myself and people like Scott Hurley and all, that's where we work, is to try to help you figure these things out. The foundation is the most important part. And yes, life insurance, I'm not here to talk products, but life insurance is a foundation for that, because that can protect everything. Okay? So, if you've got a foundation of, let's just say, $100,000 worth of life insurance, and you pass away, that house is taken care of, for your wife and kids or whomever it is to live and to deal with. The other end of this spectrum is, we talked about retirement. The plan now is it keeps creeping out on us a lot longer, the retirement age. Used to, people retired a lot earlier, and then soon after, the reality of it is they passed away. Nowadays, number one, we're living longer.
Yeah.
Okay. Number two, that retirement age is stretching out. The new retirement age is about to be 67 years old, and the average age of people is about 87 years old. So if somebody retires at 67 and they live to their life expectancy of 87, that's 20 years in retirement. Okay? And you're not working. Most people aren't working and making money, so they're relying on things like Social Security, or what? The amount of money that they put back while they were working to last. So, you spend 40 years of your life working, earning a living, and an additional 20 years living off of what you put back in 40 years' time. So you're thinking, I got to really put money back. So you have to look at those vehicles to protect the assets that you are able to save, and put things in place where you've got some money coming in, because we all know, we have our doubts about Social Security. I think it's going to be there, because if Social Security were to go away, this world is it's in a world of hurt. There's just so many people. The government's going to have to find a way to support folks and that kind of thing. Okay, so go ahead.
And it matters a lot at what age you start saving.
Absolutely.
If I started saving now at my age, that's not going to create a lot of savings by my retirement age.
Well, you're right, but the thing is, it's never too late to start.
Right.
You got to start.
Yeah.
You know, would it have been best if you started at age 20? Absolutely.
Mhm.
You know, but now that we're older, we do have to strongly look at putting more back.
Mhm.
You know, so for me, I deal with building a foundation for people to rely on, to protect the things that they're in the process of building up. And then I also work with those people who are nearing that retirement age. So they're looking at that distribution phase of their life, okay, to protect the assets that they have built up, to help their money that they have saved last them longer, okay? And I guess my biggest thing right now is that there's a term out there for people like me called TIG. So many people consider me the insurance guy.
Oh,
Okay? I don't want to be the insurance guy. That's not me, because I'm not just here to sell you an insurance policy. That's not what I'm about. Okay? And, you know, the industry, there are some bad apples out there, absolutely. But the industry as a whole is not that way. And one of the strongest things that I encourage everybody to do is to find someone that you can build a trust factor with. Okay, you know, somebody that you know, somebody that is referred to you, and that kind of thing. And take the time to sit down with them and talk to them, and you can build a plan. You know, there's people out there that charge fees for it. There's people that don't. Okay, people that, you know, they make their money by selling product and that kind of thing. But I strongly encourage you, because, you know, Tanita, you're out there starting a new business, and you're focused 100% on getting that business going and making money.
Never.
Okay, you need folks like Richard that can help you get the additional money to put into your business to get it to that next level and to grow.
Right.
Okay, you need people in the financial industry that can help you protect what it is that you're building.
Right.
And then as you do build your money's up, you know, take some of that to plan for the future. You know, to plan that when you do build this $1 million business, you know, what are you going to do with it when the time comes that you look to slow down and retire? You know, how are you going to exit that business and your personal finances and things like that? You're focused on what you do and how to make money doing that. And there's other people that specialize in certain areas that can help you do that, whether it be protection or whether it be growing or whether it be the investment side or that kind of thing, you know. And that's where so many people fail, is they get so focused on what they do for a living. You know, there's lots and lots of people out there in businesses that fail every day, and that doesn't mean that they're not good at what they do. You know, they're focused on, you know, if it's making this roll of paper towels, they're focused on making a quality roll of paper towels. But there's a lot of things on, you know, the distribution side of it or the mechanical side of it and things like that that people don't know, or the financial end of it that they don't know. And that's where you have to use those other resources to get some help.
Gotcha.
Okay, and do that. So, you know, with all that being said, I know this is very, very generic, and I really didn't put together a formal presentation with all sorts of pictures and all that kind of good stuff. I wanted this to be more interactive, because what I do in life is the real world stuff. You know, meaning protection and providing and saving and offer your retirement for our life, for what we do. And, we go out and it doesn't matter if you make minimum wage or if you make a six-figure income every year. Whatever it is that you have to work with is what you need to plan with and work for. Okay? And I strongly encourage each of you to, contact your person and do it on a regular basis. Do it once a year. Okay? To try to stay on track. In my line of work, I talk to people every day, for example, that, they look at their person as the insurance guy, and they bought an insurance policy, and they forgot about it, okay? And until they get somewhere down the road, and they say, well, they get this letter, and they say, what do you mean my life insurance is going away? I've been paying the premiums for it. They didn't understand what they had, okay? And if you sit down and have that review with someone on at least an annual basis, you know what's going on. You can make that plan and say, oh man, in 10 years, I know that this policy is going to go away, or it's going to increase in cost significantly. Maybe I need to make some plans to put something in place that may be a little bit less expensive or that'll last longer, or whatever the case may be.
So you're talking about term life insurance that is going to end in a certain period.
Absolutely. We all need term life insurance. Okay, it is part of your plan, because in my stage of life right now, I need a larger amount of coverage than I would if I'm 65 years old. Why? Because my kids, hopefully, are up and out of the house and on their own at that point in time. I don't have to worry about taking care of them at that point in time. Hopefully, at that point, my home is paid for. So I don't have to worry about that being a debt and that kind of thing. So my insurance need will actually be lower at that point in time than it is right now at my stage of life. Okay? But I still want something in place long term, because I know I'm going to pass away at some point in time. I just don't know when. And I don't want my wife to have to dig into savings to pay for any funeral expenses or whatever. I want her to have that comfort of knowing that whatever her bills are at that point in time, she can take care of them and have time to figure out what to do. And you mentioned term life insurance. Does anyone know the difference between the two, term and whole life or permanent life insurance?
Term is, the purpose is to cover you for a certain period of time. Typically, it's a lot lower cost than full life.
And my favorite thing on it is, and Tanita, I think I've actually shared this with you before, is term life insurance is like renting an apartment. Okay, you rent it for a certain time, and as long as you pay for it, you've got a place to live. Mm-hmm. Whereas the permanent life insurance is more like buying a house. It's more expensive, but you can reach the point where you pay it off. And it's there, and nobody can take it away from you. Okay, so that's kind of that in a nutshell. But my biggest thing is not necessarily the product or anything like that. I just encourage everyone to sit down with someone and use those resources. Just because you sit down with someone doesn't mean that you're spending money or that you're buying a product or whatever. Okay, I have meetings and conversations with people every single day that I have not ever sold a product to. So I've never made a penny in commissions or anything like that. It's about that plan and building that trust that I talk about. Because, in my line of work, there are a lot of shenanigans that can go on out there, And why? It's because most people they don't know, They're putting their trust in someone to do the right thing, And that's why I say you've got to find someone that you trust to do the right thing, and you have got to do your own part to stay on top of it as well, So my part to financial freedom is just planning. Okay, there are a lot of different things that you can put in place to truly achieve financial freedom that does not involve putting thousands and thousands of dollars back every single year. what you want out of retirement, Beverly, might be totally different than what I want. You might want to take an annual trip to Hawaii, and I don't. Well, that costs more money, so you might have to put more back.
And you'll buy your boats and your motorcycles and.
You know, and that's what the planning process is what do you want, and what do you have to work with, and let's go there. And there will be some give and take. You have to make sacrifices to actually achieve financial freedom. My point is, the cost of it is not what most people think to achieve financial freedom. It's more sacrifice of doing something rather than nothing. Okay? Again, that's all of my presentation. I'm not real formal with it today because with the small group and all, I just felt like we could have more of a one-on-one, if you will,
Appreciate the education.
and
Yeah,
talk.
very much.
Again, my name is Steve Droke, and I'm with New York Life. And I'm sorry, did you have
No,
a
you
question?
still have 30 minutes to fill.
And I would just encourage each of you to call somebody and just talk with them about it. And if you've got things in place right now that you haven't talked to that person in a year or 2 years or 5 years or 10 years, sit down with somebody that you know now, that you've developed trust with or whatever.
So you don't have to have that loyalty to that person that is in the past.
Yeah, here's my thing. If someone hadn't made contact with you in 10 years, there's not a whole lot of care and concern there.
So they should be calling you if you're not calling them.
Absolutely. I tell my clients all the time, I said, when I sit down with them and we take care of something right then, and it's taking care of something short term or whatever, I tell them right then and there, look, you're going to get a phone call from me. I might be calling to wish you a happy birthday, or I might be calling to say, look, you've had your policy for a year. We need to sit down and review this thing and see what's going on. Okay, see what changes have happened, and that kind of thing. And that's just the service. That's taking care of people. And once again, by saying that, I'm not saying call me. I'm happy to talk with you anytime. But there are other great people out there as well that can sit down and talk with you about their company. And, competition is what makes the world go round, and there's lots of companies out there like a New York Life or in other segments and so forth. So my thing is just find somebody and talk to them, okay? Beverly, I know, you've gone through a lot of stuff, getting Glory Shine Adornment going and so forth, and there's a lot of planning that's involved in that in all different aspects. And, you've had to meet with different resources that know a little bit more about this area than you do.
And I've done very little.
But that's, my point is you're using those resources and developing, an education or a plan or whatever to do what you want to accomplish.
Right.
And that's what it's all about. It's about you, So, again, I'm Steve Droke with New York Life, and we handle all the financial services, okay? And yes, life insurance is the core of our business, okay? But I'd like to thank you for the time and encourage you to find someone and sit down and talk to them and start just looking into your plan for the future, okay? Now, I'm not used to being the MC too, so does anybody have any questions about what I have presented or what Richard presented earlier?
No, I just recognize you as an educator more than anything.
Mm-hmm.
Yes, you want to sell product because that's your livelihood, but I see your primary focus on caring enough about people to educate them.
Well, thank you. I appreciate that. I haven't been in this business years and years, but I enjoy it, and I enjoy seeing someone, get that confidence and the comfort level that they are okay in life. one of my favorite stories with a client of mine right now is her husband passed away last September, and she was very concerned about her financial future. And, she and her husband had done a good job of putting some money back and saving and everything, but she didn't want to have to work the rest of her life, And so we sat down and we looked at things and we talked about it. And one of the most satisfying things to me was, and I hadn't sold her a thing at that point, okay, is I was able to just look at her and say, okay, Paula, you're okay. You're going to be all right. Don't worry about it, And she kind of broke down in tears and got up and gave me a hug. That's what made me feel good, So that's what I'm in the business for, okay? So any other questions?
Do you give financial workshops?
Absolutely. Absolutely. New York Life, as well as other companies, has a wide variety of resources and whatnot, depending on what topics that you want to go into and everything. We hold workshops in our office here in Memphis a lot. That's usually like in the evening time or whatever, when folks can get off from work and come by for 30 minutes to an hour workshop and learn about certain things. I personally do a lot of workshops and presentations around, because one of the big things nowadays is nursing home and assisted living care and things like that. And that's something that has become so prevalent, and it is so expensive these days that people haven't really planned for, because that's, years ago people didn't live long enough.
How do you say, for instance, how do people go about paying for that? I mean, is it personal or?
Well, there's multiple ways. I mean, personal savings, okay? There is Medicare and Medicaid.
Okay.
There's a, people think, oh, well, I'll get Medicare. Yeah. Not that many people qualify for Medicare first, okay? Secondly, Medicare will only pay for 100 days of care. So someone may only need help in their home 2 days a week, okay? Well, it's 100 days of care, okay?
For a year.
Okay.
So yes, so that may be at 2 days a week, that may be 50 weeks of care, all right? And that's all Medicare will pay for. Medicaid, basically you have to go broke to qualify for Medicaid, okay? You can still own a home, but I believe you can own your home and you have to have less than $2,000 in the bank, okay? So, and the average for like assisted living care, the average cost in our geographic area is about $73,000, $74,000 a year. Okay, so it's very, very expensive. You see a lot of people, the days of us as younger people caring for our parents or our grandparents or whatever are dwindling, because it does take so much time and effort and care for people,
Right.
that you still have your own life to take care of, and kids and things of that nature. So you got to take care of that first. And so to take care of a mother or father or grandparent or something, you love them to death, but it's a burden, because it's taking time and effort and so forth. Yes.
And the cost of college education has increased so much.
Absolutely.
Exponentially.
Staring that in the face right now.
It's not cheap.
And the amount of debt for these kids coming out of college is huge these days.
Yeah.
It's
Student
huge.
loan is a bad idea.
Yeah. So, planning for that retirement, protecting the nest egg that you built, getting back to the long-term elder care issues. There's issues for, if you're caring for your mom who's, disabled, and you have to do everything for her, it wears you out. Your health declines because of that. and obviously the older you get, the quicker it will decline when you're caring for that. So even if you could have someone come in 1 or 2 days a week to take care of them, to give you a break, and there's ways of doing that. Long-term care insurance is a big thing
Do
today.
you strategically maneuver the insurance? Say, for instance, it's what is it, a term life, and then the other one, as far as to pay to help, elderly people pay for their assisted living and whatnot.
Absolutely. I mean, and once again, we sit down on an individual basis and kind of put things into place and talk. But yeah, just like Richard said earlier, one of the non-conventional ways of financing a business is the cash value life insurance. Basically, that's whole life insurance. There's a ton of different products out there that's called life insurance. Okay, and people use it for investing. People use it for the protection and death benefit thing. But cash value life insurance is an asset. It's money that you've put back.
Right.
That is accessible to you. So you can leverage that money. You can use that money. And yes, I'm a big proponent of the whole life insurance, but the reality of it is, it might not be right for you right now. Like I said earlier, I'm in a stage of life where, I need a larger amount of coverage. Okay, I'm in this business for a living, but I have a large chunk of my coverage in term, and I've got a chunk of it in the permanent life insurance as well. And that's what I do this for a living. So, I'd love to tell you that I had it all in permanent life insurance, but I don't. And why? Because it's quite expensive. If I had all the coverage that I wanted or needed in the whole life of permanent life insurance coverage, it'd be quite expensive. So there's a plan to fit everyone.
Right.
I tell everybody all the time, so look, the important thing is get what you need. We'll figure a way to fit to the budget. Okay. Any other questions?
Thank you.
Okay. All right. Call your financial person and sit down with them and review. Okay. It just moved, so I guess it came back on. The screen had just gone blank. So, with that being said, we are at about 10:40, I believe it is, and I want to encourage each of you to use the resources of BOC. Use our membership and the resources and expertises that you have there. Take the time to pick up the phone and call a fellow BOC member. Schedule a time to sit down with them and just learn more about their business. You never know when they might be able to help you out or you help them out. That's what BOC is all about. Bringing people together, collaborating together, and using those resources. Okay? So, with that being said, once again, to Sherry Henley, the founder of BOCI, our thoughts and prayers are with her today and her family, and just hope that everything goes well. And I thank you, those of you who are attending virtually, I thank you for your time and viewing us today, as well as those that are here live today. So thank you very much, and have a great day.